Hello, my name is Nick Quinn.
Hi, I'm Connor Woods.
Hello, I'm Shane Vernier, and we're the market analyst team at howtotrade.com. Together, we'll explain everything you need to know about trading the bear pennant pattern. All right, let's get started.
In a bearish trend, a bear pennant is a great pattern to look for a signal that the trend that you're in, the downtrend, is going to continue lower. It's one of the most common and strongest continuation patterns that we've got in a bear market, and traders will use that as a mechanism for basically trying to join in on the trend in terms of looking for a way of trading it to the downside. So let's break down exactly what you need to see to identify it properly. Bearish pennant is a very common chart pattern and pretty reliable when it comes to the various different triangles that we've got to trade. You'd be looking for a bearish pennant within the structure of a downtrend. You'd be looking for the end of the initial move of the downtrend to be the start point of where we would build the pennant. And what we'd be getting is we'd be getting a sequence of lower highs and then higher lows. We then draw our trend lines, which would look for a converging point further down the line. Now, traders from there would then look to break the downside, and the candle that does that to the downside, that could be the potential signal to then get short the market and then place a stop on the other side of the resistance line above, potentially maybe over one of the swing points or somewhere within the structure as well, just to give yourself a bit of room. Now, it's important to remember these are not symmetrical triangles. Pennants are far more elongated. They're going to take a little bit longer to play out, and we're potentially going to get a higher number of swings within the structure itself. But that is the correct way to identify it on a price chart.
So let's have a look at an example of this bear pennant chart pattern. And obviously, like all other chart patterns, there's this process behind it. And first of all, we want to find that flagpole, a bit like we do with the bear and the bull flags. And then we want to find the pennant, and the pennant will be in the shape of a symmetrical triangle, and that will be that market consolidation that we see. So if we get our drawings up on the chart, we've identified, first of all, this is a market in a downtrend, and we can catch some nice moves along the way. So here's the flagpole. Here's that bearish move that we've had in this market, and you can see that if we draw these trend lines on now from where this pennant structure is that forms, you can see this symmetrical triangle that forms where we have these converging lines. Now, if you're a trader looking to take advantage of this, what you'd be looking to do is have a look to see and wait for that breakout candle once those lines are fully converged and that pennant takes place. So we have the breakout candle there. So traders may want to sell the market around where this breakout candle was, with a stop loss maybe just sitting above the most recent high that we had within that consolidation period. And you can see that from there we managed to gain nearly a 2-to-1 risk reward trade, which is a really, really good risk reward in your trading. And that's how we can use the bear pennant chart pattern in our trading.
Here are the pros and cons for the bear pennant pattern. First, the pros. The bear pennant is simple to identify, and it is visually apparent in the live market. The bear pennant occurs frequently on all Forex pairs on all chart durations, so it's never hard to find a bear pennant pattern to trade. Also, the pattern is ideal for use as a trend following strategy. Here are the cons. The bear pennant can produce false signals. Also, bear pennant ranges are often very large. And lastly, extensive stop losses are often required, enhancing the risk profile of trading the bear pennant pattern. Now, let's review some of the key takeaways from the bear pennant pattern. First, bear pennant patterns are continuation indicators. They signal the extension of a prevailing downtrend. Second, bear pennants are commonly found on all Forex pairs in all time frames. To trade the pattern, the market is sold beneath the pennant's lower trend line. Stop losses are located above the pennant's upper bounds, and profit targets are placed below the pennant. Lastly, the bear pennant is not 100% accurate. It's essential to use the pattern with proper risk management in mind. Now, if you want to learn more about the bear pennant pattern, be sure to check out the How to Trade Trading Academy inside our trading room. There, you'll find a longer form tutorial where we'll show you how to fit bear pennants into your own trading methodology. We'll then demonstrate how to take that plan and trade it against real market price action. You'll have everything you need to practice and gain valuable market experience with the Bear Pennant. Then, once you're ready, feel free to join our How to Trade Funded Trader program.